Hi folks, Lee Gettess here with the Market Sense for the week of May 17th, 2016. The charts you see in this presentation are provided courtesy of Gettess. They're the makers of the Trade Navigator software. Looking at weekly bonds here, sort of like a broken record if you remember records. They've been sideways since mid-February. They're still sideways, and they're going to be sideways until they're not anymore, and that's not terribly predictable, other than eventually they're not going to be. We were kind of looking this week for them to go up to the 167.16 area. They haven't been there yet. The best support is around 164.12. Haven't been there either. It kind of looks more likely, since they're near the highs of the congestion, that they might break down to the 162.16 area, but no guarantees of that. It kind of depends on what they react to. Probably the biggest thing this week is minutes of the Fed meeting to be released Wednesday afternoon, I believe. They seem to be concerned with the Fed raising or not raising interest rates, although based on what the bond market's done this year, the bond market kind of thinks they're not going to. So anything that suggests that they are could create a big problem here. But otherwise, I've already said the way it is. They're sideways until they're not. So right now, I just expect them to remain sideways. Stocks have almost a similar situation. They haven't been sideways as long, but the last 4 weeks here haven't really done much of anything. We were kind of looking for them to go down to the 2030 area. This low here is around 2030, and support here is kind of like just below that, just marginally below that, and that would have been a really good area if they would have just peaked below this low and then stalled. That would have been a pretty good buy. And it still might be, but they haven't been down there yet. They've just rallied back up. The middle moving average here is roughly the 2060 area, just in front of it, really. And, after shooting through it a bit, they seem to have recovered that. So they could be heading back down again. By the same token, we've got some resistance up here. Let's call it the 2085 area. They could reach that, and they could actually blow right through the old highs above 2100 here, and anything's possible, really. Again, what we're looking at is primarily concern about the Fed. Are they going to raise interest rates or not? And we'll get the Fed meeting minutes of the last meeting to tell us what they think, sort of. But, they rallied Monday and everything looked good, and then they got good economic news Tuesday, and that's bad because strong markets, strong economics. Oh, the Fed might raise rates, and they go right back down. So they're really driven by interest rates right now, and, tell me what the Fed's going to do for sure, and I'll tell you what the market will do. No, I really won't. There's still a little bit of variable there, but that's basically the focus. What is the Fed going to do? And right now, they just love low interest rates. So that's what we've got for you today. I hope you can find something profitable to get